for this special webinar series that we are holding in the month of July. The whole month of July, we are dedicating to various sectors for India in 2047. This is keeping in mind exactly what our Prime Minister has, because Prime Minister keeps talking about looking way forward, looking ahead, vision for the country, and now he has started speaking about India in 2047. Earlier, when he spoke about India 5 trillion, and now it's gone to India 2047. I think for a planning horizon, this is important. Now, EGROW Foundation is a policy-oriented research think tank, and therefore we believe and discuss issues which are contemporary and which are policy-oriented. Keeping this in mind, the next 5 webinars are dedicated to India 2047. Today we are doing insurance. Next week we are doing non-banking finance companies. A week after that we are doing banking, and so on. The month of July, all the 5 Fridays will be dedicated to India 2047. To chair the session and the series of session, we have Dr. Arvind Virmani, Chairman of EGROW Foundation. We would invite you to read his paper, which is on EGROW Foundation website, India 2050. And that India 2050 is a very comprehensive paper. And you would notice that most of the series that we are talking, there are ideas there, and there are, given his vast experience, there's way forward too. To introduce Dr. Arvind Virmani, I must mention, he was the Chief Economic Advisor of our country. He was also the Executive Director at the International Monetary Fund. Before becoming the Chief Economic Advisor, for long years he was at the Planning Commission. He has published extensively. He has published even in refereed journals, and he also carries with him the experience that he gathered before joining the Planning Commission when he was at the World Bank. He brings in a rich experience of policy making as well as a sterling record in publications. With this, I hand over the session to our chairman, Dr. Arvind Virmani.
Thank you. So we have a number of speakers, 5 in fact, and therefore I would request each of them to restrict to maybe 10 to 12 minutes each. Before I introduce them, well, let me introduce first and then maybe give a few remarks. So we have the 5 speakers are Dakshita Das, who is a former Additional Secretary Insurance in MOF, Mr. Atanu Sen, who was the Managing Director and CEO of SBI Life Insurance Company, and also a nominee director of State Bank of India. Well, let me just introduce the first 2 speakers, and then I'll come back to the others as we come back. But let me, from my perspective, I think what we are interested in is basically two things. One is kind of a long-term perspective on your sector from your experiences and so on. And secondly, on the kind of what is it that is needed in terms of policies, regulations, supporting public infrastructure, etc. So, EGROW and my own personal interests are really in the latter, but of course, one has to have some kind of a vision, as Dr. Charan Singh said. One has to have a vision of the future. Of course, 2047 is very far to think about, and that's kind of just ideal in a way. But even having a vision forward to 2030 or 2035, looking forward to what is feasible and kind of a goal to set, which would be realistic, maybe a high goal, to aspire to, and then what are the policies and other actions which government particularly, but perhaps other participants in the sector have to take to reach there. So I hope each of you will give us some of that in the 10 to 12 minutes. Of course, you're free to talk about anything which really come from your personal experience. That is a large part of this series, is to get your personal experiences, reflections,
It's not coming, sir.
these issues. But I would just suggest that those of you who have many points, like 10, 12 points, be brief. If there are that many points, probably you don't have to go into detail on every point and explain each of them. On the other hand, if you have kind of 3 to 5 key points you want to discuss, then obviously a little more detail there would be time for. So with that, let me start with, I will just go down the list as it was published. So let us start with Ms. Dakshita Das. You are the first speaker. Please go ahead.
Thank you, Dr. Virmani. It's a pleasure to be here. Now, as far as the insurance sector is concerned, we have seen some very dramatic changes in the COVID and the post-COVID regime. Post-COVID, we find that insurance penetration on the life side, there is always there is a greater awareness as to the fact that people need a life cover. And for that, LIC did an aggressive job in promoting this fact during 2020. But insurance penetration on other fronts, as far as India is concerned, is not really up to the mark. And in that sense, if we look at the number of Indians which are covered by non-life products like medical, like health, like third party, I mean, apart from motor vehicle and health, the awareness on other products is abysmally low, which takes us to the point that where do we stand in terms of penetration? In life, we are around 3%. In non-life, we are about 1%. And that's extremely low in international terms. As far as insurance density is concerned, which is the ratio of the premium to the population, there too we find that we are not really up to international benchmark. Now, one of the things which we felt when I was handling this sector was that advocacy was a very serious challenge because most Indians were not aware, and COVID has definitely brought in that awareness in terms of getting a life as well as a medical coverage. Uh, Another change, which I think at the policy level, which the government did, was the introduction of the PMJJBY and the PMSBY. Now, one was life insurance and the other was accident, and both got linked to the JAM Trinity. Uh, uh, they did well initially, but they suffered due to extremely low premium because you see, for insurance, apart from the person who buys the insurance, the critical point is the player who offers the insurance product. So recently, I think the Department of Financial Services has done well in nominally raising this premium, which brings some excitement and activity on the front of giving an outreach to this, particularly as far as certain income groups at the lower level are concerned. But also, what is interesting is that we are finding a series and a slew of announcements by the regulator right now. These range from setting up, introducing Bima Mitras like the banking Mitras we have, how to get new entities to bring in more FDI, use of tech in terms of identifying areas where insurance can be spread, uh, awareness campaign, rationalization of norms as far as investigation is concerned. However, one issue which concerns the public at large, as far as India is concerned, is the claim settlement. And that was a particularly weak point as far as India is concerned. One, policies are devised in such a manner that it becomes very difficult to unbundle the various clauses which are there. I may offer you a room rent of 5,000 and say the person next door or say Mr. Mendiratta or G or somebody may offer you a room rent at 3,000. I have a top up. What does it cover? Does the top up start operating after the main policy is over? Life that way is a simpler product. But life, not in terms of it being an investment product, but life as a term product is a simpler product. But as far as medical is concerned, It's mind-boggling the range of products which are there. And so many of them carry so many caveats in them that the public definitely buys, and more with greater awareness. Everybody says, which health insurance do I buy? But when it comes to the claim, that is where the challenge is. Again, I must compliment the government because they have recently filled most of the ombudsman's posts and recently advertised for a few more. And the ombudsman, which are all over the country, play a very critical role in settling of investor grievance. But the fact is that does settlement on the medical side happen in an auto mode? And most certainly that is the weakest point which the regulator needs to sort out. So therefore, while the regulator is making announcements in terms of opening up the sector, bringing more business into it, enabling more and more players to enter, perhaps even reducing the minimum capital required to set up a business in the insurance sector, until the claim settlement is sorted out on any front, it's extremely difficult. And therefore, I feel that I always felt that the gap in this has been advocacy, awareness, and a cleaner and a neater product. Like, I'll give an instance that when COVID happened, at that time the regulator came out with a diktat saying all health policies will cover COVID as a disease, even whether it is written in the policy or not. Similarly, standardization is required across all of us on the medical side, health side. And as far as other areas are concerned, unless we have products which are of more personalized and which cover so many things, like I remember I received a request from just general public that can photography equipment be covered by health insurance, by insurance cover? So we need new niche products which will be very easy to use and very easy to understand, and for which, if we have to go in for higher penetration, higher outreach, we need new products, we need new players, and we need advocacy. Thank you, sir. I'll stop there.
Thank you. Our next speaker is Mr. Atanu Sen. I've already introduced him, so please go ahead.
Thank you, Dr. Virmani. In fact, taking forward what Madam has just now mentioned, let us actually look at the insurance history. I don't want to go back to the LIC days and when they were a monopoly. But from 2000 onwards, the insurance industry was opened up both for the life and the general insurance and the health insurance. And the first few years were kind of, if I may use the word El Dorado days, I mean, the companies were making, money at the cost of the, the customers. In this case, the customers were the insured people. But subsequently, if you look from 2008-9 onwards, there has been a lot of changes as far as the regulation is concerned, both in the product front as well as far as the the customer satisfaction is concerned. Products which were actually more investment based, like unit-linked products, a lot of regulations came, and subsequently, if you have to look at it, I mean, if you have to penetrate insurance, penetration is obviously a function of good products as well as something which is value to the entire value chain, whether they are the insured people or the insurers or the manufacturers, whoever they are. And how do you do that? In fact, a large proportion or percentage of people, as Madam was mentioning, our penetration, insurance penetration is very low here, as well as the density is very low. I was also, the chairman of the National Pension System, and now we find that if you really have to have a social security, it is necessary. It is not only the the insurance, but the pension also plays a part. And insurance also, all the companies have pension products. So the two regulators also need to work together to bring the social security to large swathes of section of the population who are either underpenetrated in insurance or in pension, as well as in banking. JAM was the right method. At least the accounts have been opened. People have become, at least they have an account at the bank. But as we move forward, the most important thing that I feel, of course, the regulators are looking at making the products easier, bringing in more investment, or as the ma'am was mentioning regarding the claim settlement part of it, it has all improved quite substantially. But maybe it has improved in the life industry. Maybe it has not happened in the general industry. And as she was also rightly mentioning, in motor or in commercial vehicles, it is much more well penetrated than in maybe in other areas. So along with products, the most important thing that is required is how do we, create awareness about and different segments. It is not only the people who are the underprivileged, but at different segments of the population, different products, and how we make it socially aware, as how we make them aware about the different products and why it is so much necessary. See, in life insurance, when we look at it, the term products in India, it is basically, sort of a kind of a hybrid term investment products that are much more popular. Whereas in Western countries, especially in Europe, in the continental Europe, it is the term and the life term products which are much more popular, which are actually life insurance products. The general I will not touch because there are experts in general who are here. But having said that, the COVID actually explained the importance of health insurance. And the one thing that has happened and which the regulators did was opening the open architecture that came into being. The open architecture, I need not explain. It is basically the banks can, have, three partners, both in life, general, as well as in health. So that has actually, because if you do bank assurance, the one aspect there is it is a very low cost way of doing business because already you have the infrastructure. The banks have the infrastructure and you can sell insurance through the banks. And the mindset that was there earlier, that if you do cross selling, the banking products will take a hit, is actually not true because we proved it with international examples, but not only with international examples. In State Bank of India, I was basically a banker with State Bank of India before I became MD of SBI Life Insurance Company and subsequently the chairman of the NPS Trust. But having said that, in bank, we proved right from the the top going down the ladder that branches which were doing well in cross selling were also doing well in banking products, and that was actually made available to the top management. They understood it because the need of the people are different. If they have a need for a banking product, it's something. If they have a need for an insurance product, it's something else. Pension product is something else. To make people understand what is their requirement, why they should be investing in these products, and subsequently at the end of the day, as I was mentioning, popularization and awareness. And how do we do it? If you are able to do it, penetration will automatically increase if you have a good product which is actually beneficial across the value chain, not only to the customers, but it should be also profitable to the insurance companies. Otherwise, they won't do business. And as Bima Mitra, and there are banking Mitras and all these people, the business correspondents, they can all be used for the last mile touch point. So I think I will keep it there, and subsequently I think I'll again come back once we hear from the other. Thank you, Doc.
Thank you, Mr. Sen. Our next speaker is Tirath Mendiratta, who is the former ED of LIC. And since then, he has been a shareholder director of PNB and Sindh Bank. Mr. Mendiratta.
Taking the discussion forward, I mean, we are talking about penetration. So my first observation is about the penetration, what we mean by that. There are two ways to measure penetration. One way is, as is commonly used by the regulators and the insurers, is that the total premium income, insurance premium income, in relation to the GDP of the country. And the another way is to measure it in terms of the number of lives covered. and that is, number of lives insured versus the number of insurable lives. So both have been used at different places. When we look at the uh, measure or yardstick used by the regulator today, it seems that the coverage or the penetration level is only at about 3.67%, out of which, major part is in life insurance, and the less than 1%, 0.94% as reported, is from the non-life side. But look at it from the other side. When the sector was opened up in 2001, before that, the government had set up Malhotra Committee. And what Malhotra Committee said in its recommendations gives us a clue about the penetration level. He wrote in one of his reports that the insurance penetration level, which was 10% in 1971, went up to 22% in 1992. 93, this report was being written. So from 10% to 22% before the sector was opened up. That was in terms of the number of lives. And if we take that yardstick, today the penetration level would be somewhere around 40 or 45%, going by what the progress LIC has made and the private sector has done. So that is one way of looking at it. And you know, if we take it as today that 40% penetration level has been reached, it looks phenomenal, it looks very good. And another way is that penetration level insurable is a function of the insurable lives, not the entire population as a whole. So insurable, how do we come at the insurable lives? Less than 15 years we can exclude, more than 65 years we can exclude, and then knowing fully when the 20% or more is below poverty line and another 10% is marginally above the poverty line, which can hardly afford the insurance. And these two sectors, BPL and the marginally above private sector, lie in the domain of the social security, which is the domain of the government. The government only can do it, and government has done enough by way of the financial inclusion drive of the government, which the current government started, and they have launched this. Madam was mentioning PMJJBY and PMSBY, and before that PMJDY also. So both these things were revolutionary in the insurance sector. What in the recent times, what COVID has done to increase the awareness level about insurance, no other marketing, drive could have done. But before that also, what these two plans did, PMSBY and PMJJBY, they, you know, they brought insurance to everybody's household. 330 rupees nominal, less than 1 rupee per day for a cover of 2 lakhs in life insurance, and just 12 rupees a year for 2 lakh accidental cover. I mean, 4 lakh insurance at 342 rupees. Even if we take the today's premium rate, 436 plus 20, that is 456, that is 1.25 rupees, uh, per lakh, sorry, per day. So it is the financial inclusion part has done tremendous help to push the this insurance awareness. Financial inclusion, needs two things. We need to remove two constraints basically, one on the supply side and another on the demand side. Supply side, of course, we have basically institutions which have products, which are bring the quality of products, and on the demand side, we have the target group, which should have the earning capacity, which should have the awareness, and also the propensity to save and propensity to buy. So these two things the government is doing, regulator has now, which all along the regulator since 2001 when it was set up was, inclined more towards regulation of the industry, and that job it has done pretty well. But now the development part needs to be focused, and once the focus shifts from regulation to development, things will move. And the announcements that the new chairman has made uh, in terms of the his proposed activities or the list of uh, the intentions that he has made public in one of his press releases. If all these things are done, I am very sure India will be fully insured by the time we reach 2047, 2047. Some of the things that can really help is the reduction in the capital for the standalone micro insurance companies or the captive insurance. All things he has included in the list. That is why I am pretty sure that if the regulator is, now focusing more on development, I think the penetration level will go up substantially, whether in terms of number of lives and or in terms of the premium. In terms of number of lives, bottom of pyramid is very important, and there the micro insurance needs to be focused. One of the committees I was in, we made a recommendation for standalone micro insurance companies with very small capital of 20-25 crores. If that is exceeded to, I think there will be many players in the field, and you know we can cover up a large segment of the population that has hitherto been lying uncovered. So for the present, I will restrict myself here only to the penetration part of it. Thank you, sir.
Thank you. Our next speaker is Mr. Anand Pejawar, who is the Deputy Managing Director of SBI General Insurance. Mr. Pejawar.
Sir, thank you very much. It's my pleasure to be on this very illustrious panel. My regards to all the co-panelists. Sir, I will basically focus on three things. One is when we are looking at insurance in 2047, I will look at how can penetration be increased. As rightly mentioned by my co-panelist earlier, as of now, the penetration has been quite low. And if you look at the reasons, one analyzes the reasons for low penetration, I think we can roughly put it into categories like inadequate awareness. What do I mean by inadequate awareness is even for non-life or general insurance, the awareness of the non-life insurance in the general public is very, very low. Why should they have this kind of insurance? What is the reason for insurance? How this becomes an integral part of their entire product portfolio? All these things which normally a person should know while investing is not there as far as general insurance is concerned. So there is an immediate need for increasing awareness of non-life or general insurance, which is there. For example, if you see some time back, people never invested in mutual funds or SIPs, but the way mutual fund industry and AMFI started marketing that SIP in a manner which now today has become a huge inflow for the mutual fund sector itself. So something like that on a large mass scale awareness programs is what is required, especially on the non-life insurance side. Second, I think the reason is the gap in understanding of the products. Somehow even today, even after opening up the industry, I think the understanding of the product, the knowledge of products and what that product can finally offer to the customer in terms of advantages and benefits is not very clearly understood by the general public. There, the distributor is also a little bit responsible for it because they have to take extra efforts to understand the product and then communicate the same to the end consumer in the right manner so that they understand the importance of it and buy that particular product. There needs to be a little bit of a buying paradigm shift in the buying psychology of the Indian human being. Why do I say that is, even when we go out and try to market non-life insurance product, the question of return on investment on non-life product becomes a huge question. People have to understand that everything doesn't depend on what money I get if I live. Even when I was on the life side, this was question which people are asking for pure term product. Why should we buy a pure term product? If I'm alive at the end of the tenure of the policy, I don't get anything. The company earns money, but they don't understand that they enjoy the cover for that many years, which probably the premium what they are paying would be just 1/10 of the total sum assured that they would get. So that's another thing what is there. One more aspect is, there is a lack of mandate which happens in our country. For example, third-party cover is a mandated product. So people try to buy, even though there is a huge gap in that particular segment also, but that is mandated. Health, which is so important, is not mandated. Similarly, if you look at certain products which are required, from example of, say, coverage of your residential homes, your things are not mandated, due to which people usually run away from buying these products, thinking it is waste of money for them. So this is something which I think is required. And last but not the least, under this segment, I will say is fewer innovations on the product side. I think we have to now come out with new innovative products, understanding the requirement of the end consumer and see how that can be competitive and more importantly, affordable. So that's something which I would put it under the penetration part. The second point that I will look at it is policy initiatives by the government to improve insurance by 2047. I think one of the biggest demands which insurance companies, both on non-life and non-life side, have been doing is to try and knock off the GST of 18% on health and micro insurance policies. I would be making a very big judgmental statement, but then the question is, the insurance companies don't make 18% on health insurance, but we charge 18% as GST on health policies that we sell. So that's a huge payout which the end consumer has to pay. Similarly, if we want to increase the penetration in semi-urban and rural areas, which is the most important part where actually insurance has to reach, even on those micro insurance products, we have to pay GST, which is, I think, again, a big thing which is coming up. So that's something which the government can definitely look at it. And at least on those products, which are micro insurance products, which go directly and benefit the most, as Sir said, that it is the bottom of the pyramid. And if we have to hit the bottom of the pyramid and give them the protection average, we have to make it affordable. And 18% is going to be a big amount for this category if we can try and push them off. And we can keep it up to 2 lakhs. We are not saying that you should do it for all. Let it be only restricted to micro insurance products which are there in the in the country. I think one thing what I would definitely advocate is to have a health regulator. I think that is one thing which India doesn't have as of now. And why do I say this? It's because this has got multiple ramifications, not only on insurance. Look at it. A person gets into a hospital, he's first asked whether you have a mediclaim or not, instead of trying to find out what is wrong with him. And the moment he says, yes, I have a mediclaim, the cost goes on increasing. And that is something which is not why mediclaim should be there. So whether it is a mediclaim or whether it is any kind of health insurance policy, I think we need a very strong health regulator where the cost of treatment also has to be almost similar. You can't have X treatment in one particular city and Y treatment in another city, or X treatment in one hospital and Y treatment in another hospital of the same standard. I'm not comparing different categories of hospital. Sorry. So I think a health regulator would definitely bring a huge change in the way health industry is looked up in India. And as India is becoming bigger and bigger internationally on the health side, I think a health regulator is something which I think is going to benefit the entire industry, including the insurance industry, in a very big way. I think one more risk that we need to look from the non-life side is the climate change risk. And this is something which is going to be a focus area for all of us in the coming years. Earlier, we used to say one cyclone hitting the one particular part of the country in, say, 1 year or once in 2 years. Now you see 3 cyclones hitting the country at 2 different sites. Fortunately, unfortunately, on one side we have Bay of Bengal, on another side we have Arabian Sea, and on the north we have the Himalayan ranges. So whether you call it flash floods on the north or the cyclonic movements happening in Bay of Bengal or Arabian Sea, India gets impacted. And this is something which is definitely going to have a huge impact. So what is the way, what kind of models can be created which will help the insurance industry to rightly look at these models, look at the pricing of this particular product, and give the right kind of products that will change, that will take care of the climate change risk. So I think this is something which I would look from the government. One thing probably I would strongly advocate, and which I've been doing in the past also, is that in India, annuities are taxed. We don't have a social security network for pension products. So it is not government pension which is available to all. So people have to invest their income after paying tax. Whatever is left out of that, they invest into a pension plan and then start getting annuities at the time of vesting. Those annuities are taxed. And that's a huge tax because they are taxed at the level or a slab which you fall into. I think when a person has been paying tax on the income that he is generating throughout his productive years, and from there what he saves, he invests in the pension plan and the annuities which start getting after the vesting period. I think that is one area where I think the retired the people will be very much benefited, and then pension will also take a very big move in that. So I think this is one area that we need to really want the government to look at when we think about it. And the last point that I would like to make is on the regulation and the distribution side. I think a lot has happened since 2002, where in India earlier we did not have corporate agents. Then we started having corporate agents. Banks were allowed to become corporate agents. We had brokers. We had insurance marketing firms. Now we are talking of POS channel. We are talking of common service centers distributing insurance in the rural areas, and now the Bima Mitras that is there. So that's something which is very good, and I'm sure the kind of things that we are looking and hearing from the new regulator is definitely going to give a lot of boost to the insurance industry in the coming years. But one thing I think we should look at it is how banks can be good distributors of insurance products. And I think two things what we need to look at it is that banks should also look at other than asset customers to sell insurance product. Today, large portion of the business happens through the assets which the banks give, whether it is personal loans, whether it is vehicle loans, whether it is home loans, whether it is commercial loans, MSME loans, whatever kind of loans you talk of. Insurance becomes an integral part of that. But if the bank starts looking at the overall liability customer, the deposit customer which is there in the bank, which is a large portion of the entire banking structure that we have, I think the penetration of insurance in India, both in life and non-life, would go a big way. Another thing is if Reserve Bank of India could look at allowing banks to bundle products in the right manner and offer it to the customer. So even for a liability customer or for the bundling of it is done in a certain manner as of now. But if it is allowed in a structured manner to happen throughout the banking industry, I think banking industry earns non-interest income. The insurer gets a very good network of branches without having to invest, making the cost lower, which finally the benefit goes to the customer. Because if the distribution cost is lower, the customer stands to benefit. And the servicing aspect, because what we have seen when I was in SBI Life and now in SBI General is banking customers have a very good persistency rate. So they renew their policies in time. The persistency is very high. Banking branches give very good service to the customers. And banks can become real distributors of insurance product the way it's happening in the European country. I think this is something which I would definitely advocate to have, push insurance to be a big contributor to the GDP by 2047. Thank you, sir.
Thank you. I'll just kind of very briefly, you've given a number of suggestions which I think are would form the good basis for debate and noticing. Let me quickly mention them. One is this issue of mandated versus non-mandated. I think that's a very interesting point which needs further thing. Maybe you can elaborate a little bit more in the Q&A. The second one is on the health regulator. Clearly, this issue came up when price limits were imposed in hospitals, for example, on supply of various things. But I think, regulating, in a way, this is a bundled product because if I'm in a hospital, I have pretty much no option of choice. I'll have to do what the hospital wants. So it's an ideal place for regulating the hospital rather than putting price limits on the overall drug use. If I buy drugs from outside, I have a choice, but when I'm in the hospital, I may not have a choice. So it's an issue of regulating not the drug or the device, but the hospital. So very useful point. I'm glad you made it, and obviously it requires more debate. The third one is taxation. You mentioned a couple of things, annuities and GST rates. Yes, I think that's a good subject which needs to be further debated. Fourth point, again, more for the future, but quite rightly raised, this whole issue of climate change and the disasters which are likely to happen in the next 20, 30, whatever years, and whether we need to start thinking about those and what government and what private sector, etc., should do. I think that's definitely. And finally, you mentioned RBI and the bundling of projects. That I recall that in the US, for example, housing insurance, general insurance on housing is bundled with the loan. So yes, I think that's an important issue which certainly the regulators should take note of. And again, perhaps we can discuss some of these in the Q&A if we have time. With that, let me turn to our final speaker, Mr. Chandrakant Mishra, who is a founder member of Care Health Insurance and heads the rural and corporate business for the organization. Mr. Mishra.
Thank you, sir. Very good afternoon. Most of the points on penetration has been covered by my. Am I audible?
Yes, you are. You are.
Am I audible, sir?
Yes, you are.
Sir, most of the points have been covered by previous panelists on penetration. I think why the low growth of penetration, and most of the, I think two things I would add without getting into the same points again and again. One would be obviously something similar to what was told just before me, having a health regulator. We need, I think, whatever penetration can only increase if we are able to address abuse and fraud in any format, maybe in property insurance or the government is thinking about guarantee insurance on that format or whatever format. If we want to increase penetration, I think the insurance companies needs to be there has to be a system of controlling frauds or abuse of policies. It's same for life insurance companies, for personal accident, for low ticket size property insurance, and whatever format. One would be that, and second, what I would also like to speak about would be freeing up the distribution depending on the present growth of technology or fintech companies. Uh, to give an example, I would say like to have more capacity for the distributor or for the insurance companies, like what we see in the banking micro segment now. NBMCs, MFIs tying up with large banks and giving loans to the small, giving small ticket loan size. So actually utilizing mutual strength and to understand that insurance is also an financial product and how do we take that. So maybe roping in much more stakeholders, starting from reinsurers to fintech companies to micro insurance companies. So it has to be a whole stakeholder has to be activated, and that can be done by easing up the regulation on distribution. I think that has been spoken about. The regulator says so. The micro insurance companies, the working paper also suggests so, but we have to see that. A logical conclusion of that is Bima Mitra. Maybe we have to structure those Bima Mitra distribution system in the way that right product is given to the right product through technology, so that distribution cost is limited and fraud and abuse, the KYC, everything is done in a through technology in an easy form, and then only I think growth and penetration can happen. So my limited point will be this. I think most of the points that I have been envisaged or has been discussed, so I would not repeat it at the cost of that. Thank you, sir.
Thank you. Actually, we've used very little time. We've actually finished in less time than we had anticipated, but that's fine. Sharon, look for questions. Who is there anybody? You can either raise your hands if you want to make a comment or a question, or Dr. Charan Singh, if you are seeing somebody who may want to comment. Okay, you go ahead, Dr. Charan Singh.
Yeah, I had a couple of thoughts while listening to all the speakers, and I really wanted, as I was looking at, I really wanted their thoughts on, say, as you mentioned, Mr. Chairman, that what would be 25 years maybe too far, but what is their vision of India 2030 or their vision of India 35, 36? And keeping in mind, what are the factors that really drive insurance penetration? Now, I like the way Mr. Mendiratta mentioned that what COVID did, probably no other advertisement would have done. Because COVID made people realize that, oh, had I done it, maybe I would have saved a lot. So I think what would be the driving forces? For me as a professor, I always thought per capita income is an important driving force. If I have income, then I will probably invest in insurance. My preference and priorities will be firstly consumption, then education of my children, and then, of course, health, immediate expenditure, and insurance the last. But now it seems, how do we, how do we after COVID, how do we tell people that insurance can't be the last thing? Probably it has to be up in the priority. So I really wanted to know how would the experts guide us for a bigger penetration? Bundling is a good idea, which I agree, but I thought as an economic factor, or are there any other factors? I also had a few products in my mind, and I thought if the panelists could give some their experience or how do we go about expanding the presence. Now, I'm sorry, it may sound a little naive, and Mr. Chairman, I'll just take 2 more minutes in my observations. I realized that when tea was introduced in India, or when cigarettes are introduced in India, they use a very addictive model. And once they hook you to these products, and most of them operate around college areas, once they hook you to these products, then for next 70 years, it is very difficult to wean the person off of these products, be it tea, coffee, tobacco. So I was wondering, is there a way that we could hook people to insurance products? One example, simple, could be if I could say, okay, at 12 rupees insurance for a year, I insure the whole population for first year or second year, and then say from third year they have to take it on their own. The other thing is, should products like insurance, which are so important for labor productivity because it helps health, be introduced at the school level? Sir, if you remember when we were children, at the school level, we would get bankers with little booklets and they would come and say, this is the children's scheme. We would, on the very first, the day of the feast day, they would come and hook us to opening a bank account, and that would go further. So I'm looking at how can insurance work? The other thing, I've got 2 more points. One is it possible that insurance companies can come out with a product which does not draw from the Western world where per capita income is much higher, but draws upon an Indian psyche where per capita income is very low. Insurance is necessary because out of pocket expenses done by an individual immediately reduces that person below the poverty line. So it is in our interest of the individual, that he has an insurance product. Keeping that in mind, is it possible for Indian insurance industry to come out with products which are useful for people hovering around the poverty line? One example I would give is, if they open up, if insurance companies can open up yoga centers and say, here is an insurance, but you are free to come and attend our yoga classes. Or uh, they have concessional vouchers for their yoga centers. So people get addicted to doing yoga and stay healthy, but of course start get using the insurance product. The last point, sir, I would like to mention, in a very religious country like ours, where mandirs, gurdwaras, churches, they play a very important role. Yoga centers, Patanjali plays a very important role. Is it possible to hook them up? And they have so many employees. And if these people who talk about spiritual issues, if they can start talking off and they can be hooked into and say financial security helps you in your emotional stability and emotional security. And somehow, in, I have heard about the Bima Mitras, but can we make them also the Bima Mitras and they do the word for us? Quick observations if the panelists would like to react. Leave it to you, Chairman, sir.
Yeah,
Thank you.
so Ms. Das first, and then, yeah, the others.
I was getting very restless to share a very great experience which happened in 2020. Not the context in which it happened, but what happened. You see, in the first round of COVID, when we were tragically losing a lot of our fellow countrymen, LIC, at the behest of the government, used its vast distributor network to connect with the state governments and to reach out to the deceased families. Now, we would get daily lists, and I personally would hold a VC every day with the various regions of LIC, the zones as they're distributed, to find out how many people they have reached out to. Now, that was advocacy at the basic level. You see, that is when you were touching the grief of a person and also telling them that, look, if you have any insurance papers, give it to us. And LIC did a fabulous job. I think one of the, in Gujarat or somewhere, we had a case where within 24 hours they settled the claim provided the papers were there. But what happened there was that we got a lot of feedback from families which said, oh, we didn't realize the importance of having a life cover. Now, that's the kind of point you have raised, Dr. Charan Singh, that how do we make it something which is so addictive? And a lot of that is why we find that this program of LIC, which ran for about 6 months, this outreach was not a marketing strategy on our part. Actually, it was, what can I say, it was an outreach to deceased people. But we forget those days because we lack the sensitivity now. However, in that context, it was very important because we found a far outstanding number of people who went in for insurance covers there. Having said that, I believe that one of the real problems which is afflicting life is that it is life covers are being treated as an investment product. There is a clear distinction between a term product and an investment product. You go to a bank, and that is one of the risks we run, that you go to a bank and then say there'll be an agent standing there who will sell you a life cover. You'll happily take it thinking that, okay, now in today's times, yes, I'm aware I need to be insured. And then you find that the first 3 years, your premium has only just gone down the drain. And actually, if you look at the time value of money, by the time the cover finishes 10, 20 years later, frankly, you're actually in the red. If anybody has even the basic, sense of the depreciated value of money. So therefore, what we need is, as I repeatedly insisted upon then, and I feel so now, advocacy with very clear lines as to what is the product the customer is getting. Yes, this problem is there in health also. This problem is there where we are taking third party, where we are not taking the better insurance, and we have the same problem in life. Also, to address the point Dr. Singh mentioned about newer products, which a lot of panelists have mentioned, we have also going in that direction where 2047 seems to be a space where we will be entering with some very exciting new products, like the surety bonds which NHAI is speaking of. It's trying to develop certain surety bonds which will give risk cover and may eliminate bank guarantees. Given the push that the government is doing towards capex and given the kind of construction activity which is happening, if this model is firmed up, it's going to lead to a penetration of a different kind, apart from it becoming a source of awareness. These are the 2 points, sir, I wanted to make.
Thank you. Yeah, please go ahead. You had, yeah.
Yeah, in fact, point that Dr. Singh made regarding, hooking people, very valid point. How do you get people to understand? And during the COVID times, basically people understood the importance of a health cover. Now, yes, that is true, but like the point here is how do we keep them engaged for 50, 60, 70 years? Now that the COVID or the Omicron is going away, people are also not wearing masks. We need to keep them engaged and hook them. Now, and it is not only, sort of getting your insured, hooked to it, but the whole, value chain, whoever the players are, they should all feel that we are in the game, we are in it. So what are the areas that we are looking at? Basically, regulation is one. And regulation has developed over a period of time, and regulation is now very focused. And I think during the last 20 years, we are seeing that the regulator is absolutely up to the game. Second is product. Various products for different niches are there, right from the downtrodden to the very wealthy people who are looking for, maybe unit-linked like kind of product with a little bit of, insurance as far as life is concerned. And also product in the general insurance space, numerous products are there. But the major, two areas where we need to look at, one is awareness, the other one is reach, or either way you look at it, reach and awareness. Now, who are the players? Basically, as we were saying, insurance, other than the regulator, the insurance company is the player. Then, the corporate agents, along with the banks who are the corporate agents, then the brokers, agents, and the specified persons, or whoever they are. And they need to understand the products, and things are becoming so technical. A learning process needs to be there. Yes, we know that somebody has to be class 8 and pass some small exam. But as we move forward and more technical it becomes, I think that is one area. If you have to reach, if you have to make people aware, the customers aware, then the people who are selling those products need to understand what it is and need to be up to the mark. So I think with, Anand Pejawar is mentioning about climate, all these areas will come into being. You need to have products for them, but to understand what kind of product, and if there is a product, what kind of, intelligence that is going behind it, even in life with the, the longevity. Today we are talking about longevity of, 72 to 75 years in India. Earlier it was 60 years. But let me tell you, within the next 20, 30 years, there would be an explosion in longevity. People will be living much beyond 100 years in the next 30 years. There will be a huge population. So our actual science has to also to develop. So awareness and reach. Product will come. If the understanding is there and the awareness is there, and we understand the need of the people through, specialists who would be doing through machine learning or artificial intelligence, what would be the need of different segments of the people as we move forward, be the underprivileged or be the very rich or somewhere in between. And it is not only health, general insurance and products of fire, the commercial vehicles, numerous products. So understanding those, because general insurance, why is the penetration so low? In health, people do understand if there is a COVID-like thing. Yes, if I didn't have, health insurance, so I suffered. But in other areas, they may be suffering more because of fire, because of something else, because of marine, or numerous other areas. So people we need to make them aware. And how do we make them aware? Through social media or through other means, through the language, not through English or just through English. People do not understand English. It is not, we have to go through the local language. So how do we do that? And how do we bring everybody together? And I was also thinking, as I was mentioning, because I found earlier also in pension, because both the insurance, IRDA as well as PFRDA, they look into pension, the annuity part of it. And there is quite a bit of interconnect. The government was earlier thinking of having a super regulator. That idea is fantastic. If there's somebody who can guide, like in the defense also, we are having something who would be, a super, looking after Army, Air Force, Navy, and he's driving it. So similarly, we need to have a super regulator or a regulator who will be able to override whatever is being driven by a particular regulation. Because of the annuity, things are not moving, pension is not moving in the pension, PFRDA side also. It is growing, the asset under management is growing humongously. But at the end of 60, 65 years, people are not getting into pension. They're keeping it invested because they think that a better return will come if they keep it invested as a mutual fund. So this is what is happening. So if you have to move up to the underprivileged, you need to have a regulator who look into all the gamut across the the areas, across the insurance or pension or banking, as well as skilling the people, not only the people who are selling, but also the people who are the corporate agents and the other agents. So I think I'll leave it at that. Dr. Virmani, can't hear you.
Yes. Would any of the other speakers like to say anything, or should I move on to the next question?
Sir, can I come in here, Anand Pejawar?
Yes, please. Go ahead.
Just to address what Singh Saab mentioned, see, the insurance companies are doing their best to penetrate exactly the way you mentioned, but the kind of product that we are into, for example, because I handle marketing and sales also, the insurance companies goes to the school, conducts a lot of programs, even will conduct some painting competition for the children so that they get to come together where you can talk to them, talk to their parents and all that. But here the investor is not a child. The person who buys the policy is the father or the mother. And that is the area where I think we need to hit. Whatever measures Singh Saab mentioned, all companies are doing it in some extent, but not in a very structured manner, which it should happen. That is where I said the awareness levels, one at the company level, another at the industry level. So the way mutual funds started, AMFI started doing it for mutual funds, I think insurance companies should also start doing it on a industry level to encourage that product. A lot of understanding has also gone into the distributors, because now the need analysis is one of the instruments which the distributors are using to find out the need of a product or a solution to a problem of that particular customer and how it can be done. Banks, RBI has brought in a wonderful regulation saying, can we have need analysis and suitability analysis? So other than need analysis, whether that particular product is suitable to that particular customer or not is equally important. And that is actually what is followed by the bank SPs or the specified persons who are bank employees who sell insurance product. But the question still remains, if I have taken a home loan worth 25 lakhs, which in India today happens to be for a middle income group, a biggest liability for the longest period in my life, which is 20 years or 25 years, do I cover that with an insurance policy to ensure that my family doesn't get impacted if something happens to me? No, it is not bundled. It is optional. It is voluntary, unlike which happens in the European countries. Now, if we can at least, what I was last time mentioning, which Virmani sir mentioned, is what you mean by mandated versus non-mandated. First time in the history of non-life insurance companies, we have seen medical or health policy line of business doing more business than motor, which is mandated. That's only and only because of COVID. Now, do we need to wait for one more COVID-like situation to happen for each one of us to understand the importance of the insurance? No. But will we still learn from it? No. If I give you one reason, Chennai floods, economic losses of over 20,000 crores. The insurance claim were not even 2,400 crores. What does it mean? There's a huge gap, a protection gap. Have people learned from this? No. The numbers have not gone up on the insurance. Look at Jammu Kashmir floods. Look at Uttarakhand flood. Every place where natural disaster has been, has hit, have the people understood the importance of insurance and tried to make it a part of their portfolio? Yes, to a certain extent one sees, but has it actually gone and covered the whole size that is required? No. Even if I look at SME, MSME who taken loans, if my loan is 100 rupees, sorry, if my total asset value is 100 rupees and I've taken loan of 50 rupees, I will try to cover only for 50 rupees without knowing that it can happen into an under insurance. Why? Because I want to save money. I want to save, I don't want to spend that much. Now, till this mindset of the consumer does not change, and it doesn't see insurance as a financial tool to protect himself, it's going to be a little difficult. And that is where education and information dissemination to the last mile, which is right at, so companies like us, we have also started doing something like Nukkad Nataks. You collect in a village in a particular chowk, and you enact a particular play where people come and stand in their language so that they understand through that short skits what is the importance of insurance and how important insurance can help. But it's a long mile that I think we need to cross. Thank you, sir.
Thank you. Okay, can we move to the next question? I see a hand here, but Sharon, is there any?
I think Mr. Mendiratta wanted to make some observation.
Okay, but yeah, I thought I said yes to him, but okay, yeah.
Thank you, sir. Thank you so much. In fact, much of what I wanted to say has been shared by Mr. Anand, but still, I would like to, even if it is repetition, some of the points. One, Madam Das, mentioned about some personal experience in COVID and LIC's role in that. One thing is because I have been an LICian, it really, makes me happy. But this has been a routine for an organization like LIC. Any catastrophe or the natural disaster, which Mr. Anand was also mentioning, whether it is Chennai floods or whether it
Mr. Mendiratta, you've suddenly gone mute.
I think is what disconnected?
Disconnected, dropped.
Yeah, I think dropped.
Okay, but while we wait for him, Charan, I see one hand. Do you see any other question in the chat box which have been there? Let's take 2 or 3 questions together and then we'll.
Sure. There was one question in the chat box which I thought was good.
Who's the person?
So the one question was, why do insurance companies not give back 100%? Why do they only give 20 to 30%? That was one. And then there is somebody by the name Akitesh Panda, and his is something to do with climate change. How SBI is preparing for the challenge on climate change. So that I thought was a good question.
There was another one on climate change, I think.
Yes,
yeah.
there is another one from Ashish Sharma also.
Okay, let me just ask Abhishek Mishra to give his question also. Abhishek, you had your hand up. You want to speak? Unmute yourself.
Hello.
Yeah.
Hello,
okay.
Am I audible?
Yes, please go ahead.
Yeah, good afternoon, everyone. My question is about the complicacy of the process of claiming the insurance money. So what I have observed that the customers who have the insurance policy in India, when they have to claim for the insurance money, the process of various companies are normally very complicated and they have to do a lot of documentation and all. Whereas my experience is like when I was in France, So there was a time like when my Indian insurance, health insurance got expired, and suddenly I got some sickness problem, and I was diagnosed with some disease. And at that time, I have no insurance policy with me. But the doctors, they called some insurance company people, and even after getting the diagnosed with the disease, they did my insurance, and everything in the process was very smooth. So I feel that in India also we need that kind of the customer friendly process when someone is having any insurance policy, and this point missed somewhere.
Thank you. Maybe I'll just ask Mr. Nanda, and there was Mr. Abhishek Mishra and Mr. Nanda. Did your question got asked by Mr. Charan Singh? Then we'll turn to the speakers. Is either Mr. Mrs. Sumitra Nanda and
this is Soumitra.
Who is speaking?
This is Soumitra Nanda.
Okay, go ahead.
Yeah, so I think first of all, thanks for the session. This is a great session. So I had a good observation around Mr. Anand Pejawar's question about the point about bringing in the role of a health regulator and then reducing the cost of variance in care, which is huge today. But I was just trying to see what is a practical approach to do that. Because today, if you see, in my view, I run a health tech company after spending almost 2 decades in healthcare, working across the globe. A couple of things. One is, data is available today, but it's not put to use in the way it should be. But is there a practical way or a suggestion how this can happen? For example, we are talking about reining in the cost of healthcare.
Okay. Does Architesh Panda or Ashish Sharma want to speak? And then we'll have a concluding round from you.
Yes, sir. Good afternoon. Thank you very much for this wonderful discussion. I have a very precise 2 questions or queries. One is related with the issue of moral hazards. Whenever any disasters or climate change risk arises, any extreme events. So generally, it has been seen that though the people are affected, but they don't buy insurance, considering that the government will pay or they will compensate partially or fully. So what's the solution? Number one. And second, in the areas where disasters are occurring frequently or with higher intensity, generally people become risk averse. Their behavior towards that risky events becomes very normal. They become tolerant with that, and they don't buy the insurance. So how insurance companies are seeing or modeling this behavior to ensure that these people who are at a risky areas or their assets or lives are at a risk are necessarily going to buy the insurance.
Thank you. Architesh, Punu?
Hi. Thank you very much for this opportunity, and it was really interesting listening to all the speakers here. And my question goes to Mr. Anand, who really talks about the norm on climate change and how insurance and disaster risk insurance can really play a great role in India. It is not really happening. So I just wanted to ask, like, how SBI now is preparing itself for the challenge of climate change. Not SBI as a whole, it goes to all the panelists also. How they think that Indian banking sector and insurance sector is preparing themselves to this challenge. Because as far as I know, from my work with the Munich Climate Insurance Initiative in Bonn, that it's going to be a big challenge, and we are also working with different countries at our capacity to do that. So that is first question. And the second one is, do you think that disaster risk pooling, which is a kind of a recent thing now, we are working with different countries in the vulnerable countries, where countries come together to pool their risk and they give a payout when the disaster strikes. So currently it's happening only at the national level, which we call sovereign risk pooling. So I was wondering if the states can come together and pool the risk, and is there any opportunities, or what do you think, that is it possible to do that at the sub-national level, or what are the challenges and opportunities you think? So I think that will be really interesting to know from the panel. And thanks again.
Thank you. So we will just give concluding comments now. We can go in the same order as the speaker spoke.
Okay. So, shall I start?
Yes,
So,
please.
first of all, I've listened to the questions. They are interesting, and I've listened to the second round of the panelists. Again, we come back to some core issues, which is awareness. Insurance is an individual choice. It's only under MVA and things like that that you have it's a mandated thing. Or you go to take a house building advance, and you need an insurance. Having said that, rest is all an individual choice. I know personally, I live in Delhi. It's a seismic zone. I've taken a risk cover for my house, which I have recently purchased. I've also taken a burglary and all that thing, but some people can think that, having an overcover, you are paranoid. But it's not so. It is the fact that if you're living in a particular region which is either flood prone or it's earthquake prone or it's a fire hazard, that's an individual choice. So we come back to two, three things. How does the insurance sector penetrate? And it penetrates when your experience of the sector is very good. When you're not missold a policy, and you're not missold a policy as an investment product, number one. Number two is that the settlement of the claims should be a seamless thing. And number three, yes, with all the changes that Heredai is contemplating, one of the panelists had mentioned about the development part, and that's where IRDA needs to come, has to rethink what they are going to do in terms of customer satisfaction. One last point which arises from what Mr. Mendiratta said earlier. I was not speaking in terms of LIC as an institution. LIC as an institution is extremely robust. I was speaking about the outreach program, which inadvertently became an awareness program, leading to a greater appetite for life cover. So these are the type of models which are available in the country. But again, if I want to be covered, I will be covered. If I don't want to be covered, I won't. Thank you.
Thank you, Mr. Sen.
Yes, in fact, I would again, sort of stress on the point which Madam also mentioned about the awareness and how the reach. And the third point that was made was how do we understand the need of different people? Now we have big data, large data, very high computing power. It will increase on a day-to-day basis. So I think whether we can use, intelligence, artificial intelligence and machine learning to understand and to specifically, sort of answer that question on climate. It can be on anything, but since the question was on climate, at the end of the day, what could be the climate changes that we are expecting in a couple of years, 3 years or 5 years down the line? If there is a global warming, if there is no global warming, what are the models? And if these models are, need to be run through, as I was mentioning, big data and machine learning, and subsequently, specifically on different areas, how it will impact, whether it will impact more in Delhi or in Bombay or in Northeast, and how much will it impact there. And if we understand that, then the risk part of it can be taken care of, and we can have specific, area-wise policies or products which can target. So that is what will come in another 5 years, 10 years time, with the big data, with the intelligence that we are having, with the modeling that we will be having, and the regulator coming out with new products and specific products, which the insurance companies will also be demanding, and more than the insurance companies, the customers will demand. And why will the customers demand? If we can have awareness. And if we have awareness, at the end of the day, if the demand, can we have the reach? And the reach can be done through different, see today, the agents get a particular commission for different products. If they sell a life product, they get a much larger commission, maybe about 38 to 40% of the first year premium. If they sell a unit-linked product, they get a much lower commission of 5 to 6%. At the end of the day, all this needs to be balanced, and you need to focus on different customers, and the agents have to be educated also along as we become more technology oriented. Yes. Thank you.
Thank you, Mr. Mendiratta.
Mr. Mendiratta has dropped out, I think.
Yes,
Okay.
sir, I am back because it was
Oh,
a
you're
power
back.
failure.
Yeah.
Yeah, you
So,
can finish your comments plus anything else, Mr. Mendiratta.
yes, sir, yes, sir. So, one thing I was mentioning, which Mrs. Madam Das again mentioned, it was not in relation to LIC, but what I meant was, which Mr. Anand was mentioning, that after every catastrophe, people forget what they had learned. Not in case of COVID, because here people have become really aware of the need for health insurance in particular and term insurance to a lesser extent. So that is why health insurance has come into focus. And the way he mentioned that, mandatory, non-mandatory, first time the non-mandatory part, the health insurance overtook the motor insurance. So this is, a very glaring example of people learning from disasters. Secondly, awareness part also, Dr. Charan Singh mentioned about so many things to be done. One is about the, putting this into the curriculum, which we have been saying for quite some time, that not only insurance, but financial planning as a whole, including a part of insurance, should be a part of the curriculum. Not that a booklet is given by an insurance company or a bank, which coming to the on the feast day or whatever day. Actually, it should be a part of the curriculum so that from the childhood itself, the boy or the girl is made aware that there is a need for financial planning, and insurance planning is an integral part of it. So these were about these things. There are certain other things like, uh, about increasing the penetration. Now the focus after COVID has turned to term and health. Term insurance is not that premium rich. Health may be there to some extent. If the current yardstick or the parameter measure of premium to GDP is to be taken for measuring insurance penetration, then we need to focus on the premium rich policies only, which can come through annuities, which can come through ULIPs. Otherwise, the term and health itself will never increase the level of penetration in the country, so far as the premium part is concerned. And there, if annuities have to be focused, the point that Anand made about making annuities tax free, even if to a certain extent, say 2 lakh or 5 lakh rupees per year, not in without any limits, then it will make sense, and people will focus on not only the retirement planning, the old age planning, but also saving for the rainy days. So this is one part, annuity. About the tax also, the point he was making, whether it is GST or tax exemption. Tax exemption, beyond the limit of 50,000 that today is given for mediclaim, it could be raised if we have to increase penetration levels in terms of premium. And in GST, very funny, healthcare has a lower GST rate than the health insurance of 18%. At least these should be at par, healthcare and at least micro insurance, they have been generous enough to give 18% GST exemption. Micro insurance is free, and along with that, like PMVVY or PMJJBY, PMSBY, all these the government has exempted. Why not exempt the health insurance also? If not exempt, at least make a some reduction in the rates. So there are many points, but time being short, I would restrict myself to these points. And the last point I would make is about JJBY, where premium has been revised recently, but there is a definite need to strengthen the plan, to update the plan. We can mix these two things, make them one product, including accident also. 456 means one product. And if the regulator can think of, and finally as regulator is thinking of allowing life insurance companies to sell health insurance also, and if that critical insurance part or mini critical insurance part is also made a part of it, the people that we are going to cover under BPL and other who need health also, so that will be a great help. There is a need to now modify or rather improve JJBY, which has been selling. Last but not the least, though I said this is my last point, there are 43, 44 crores of Jan-Dhan accounts, and the people covered even under the 12 rupees scheme of PMSBY has been to the tune of 20 crores. So even PMJDY accounts of 44 crores, if these are covered by either PMJJBY or PMSBY, the level of insurance in terms of life would go up considerably. Awareness definitely is one thing. Without awareness, increasing awareness and education, this cannot happen. But see, 2 days before, we had this Insurance Awareness Day, 28th, National Insurance Awareness Day. And a week before that, we had a National Yoga Day or International Yoga Day. Everybody knows about International Yoga Day, but how many of us know it came and went? It has to be emphasized. There have to be activities planned. Definitely, Life Insurance Council was taking the role of, a champion for insurance industry when, Mr. Anand was mentioning about the MFI, their campaign about, Sahi Hai, mutual fund Sahi Hai bhai. So they came up with another ad saying life insurance zaruri hai. So like that, whether IRDA does it or government, everybody, a collaboration, government and regulator and insurance industry, if they collaborate, insurance awareness can definitely spread. And that would add to the penetration level that we have today, either in life side or the non-life side. Thank you very much, sir.
Thank you. Next, Mr. Anand and then Mr. Mishra, please.
Thank you, sir. I will just touch on 3 points which some of the participants have raised for me specifically. What I mentioned by health regulator was that generally what is seen is that if, say, I'll give you a simple example. If an appendix operation is done in a particular level of hospital at 40,000 rupees, the moment the hospital knows that he is covered under Mediclaim, it gets up to 80,000 rupees or 60,000 rupees or 70,000 rupees. Now, just as you have a category of hotels, which is grade 1, 2, 3, 4, 5, 5-star, 4-star, you could have these categorizations of the hospital depending upon what kind of facilities they provide and the rate that should be charged for a particular process. It could be a surgical process or whatever you may call it, has to be standardized to a certain extent. You can have a 10% variation plus minus, but it can't be 100% if a person is covered under Mediclaim and not covered under Mediclaim. And this can happen only once there is a health regulator regulating the entire health part of it. It could be hospitals, it could be distributors, it could be anything that we are looking at. But if that is not done, then this difference in the charges and in the cost. Just for example, look at the time what happened during the pandemic. There were a few hospitals who were charging a few lakhs for 14 days hospitalization as a package. Now, yes, somebody could obviously afford it. They will go to that hospital. But can a common man go? Can a common man get the right kind of treatment in the cover that it is possible? As of today, no, not to the extent. Yes, Ayushman Bharat has created the infrastructure, or is rather creating the infrastructure in the rural and semi-urban areas where earlier people used to come to cities and towns to get the medical done. But I think if we have a regulator in the country, this would help the entire industry, including insurance industry to a large extent. The last one is the natural disasters. Yes, to the best of my knowledge and what I have been seeing, because I also handle marketing and sales, is that once a person gets impacted negatively, his attitude towards insurance changes. And that is what we have seen in the case of COVID. So wherever these natural disasters have hit, at least on the commercial side, so you have these large corporates, mid-sized corporates, small-scale industries, they have started looking at insurance in the right manner, ensuring it in the right way, in the right amount. To a large extent, companies like us have also gone to the extent of giving value-added services of being risk managers. What is the risk? What is the risk and how this risk can be mitigated by doing certain very simple things like like an electrical audit and telling them how the things need to be changed so that it can help them to prevent a fire in future. So these kind of value-added services have also started being offering to them. But has it percolated down to an individual? No. as rightly said by one of the participants, whenever it happens, they expect government to compensate them or government to take care of that part. On the climate change, yes, there has been a lot of work which is happening with the Actuarial Society of India or the Indian Institute of Actuaries and the International Institute of Actuaries on the climate change. There has been modelings which have been worked. Even in India, there is a lot of work happening on this. In fact, there is a full paper on climate change risk which is there, where they have said how India is divided into 4 zones, what are the kind of risks which are happening. But have we designed an actuarial model to understand? No, we have not yet gone to that level of developing a model which can help the actuaries to understand the risk and price it in the right manner, the way it should be done. I think that's another few years, couple of years will take to get that thing done. But pooling of risk has definitely happened, and it has been happening for some time. Like, for example, you know, in India, we have a terrorist pool, a terrorism pool. Of late, recently, because of the Russia-Ukraine war, which is going on, there was a marine issue problem, marine insurance problem. So now there is a marine pool which has been created by all the insurance companies, by GICD taking a lead in this. So government and insurance companies are coming together to take care of these kind of either natural disasters or man-made disasters, whichever way I would call it, because Russia and Ukraine is a man-made disaster. So how do you take care of that part of it and help the Indian commercial segment to take care of those eventualities in case if it happens? So yes, a lot of work has happened, but a lot needs to be done. And that is what I'm looking at when we look at insurance at 2047. Thank you.
Thank you, Mr. Mishra.
Thank you. So I would add only very few points on this. One would be obviously information, education, and communication to the ultimate customer or the beneficiary. That will add a lot to the penetration, and also a lot for the insurance companies to make genuine product for the genuine customer, for the ultimate customer. One example would be, say, now in some rural segments, the demand for a e-consultancy. So that's a new demand which is coming through various financial institutions working on that segment. But that's a new, I think, technology. The need for the doctor consultation and the ability of technology to deliver has given that. If I take, say, a few years back, the previous avatar of Ayushman Bharat taught us to how to do micro health insurance in an indemnity format through technology. I think that the similar kind of things will come only through right information, education, and communication. Second most important point, maybe on product, on liability side or property side, would be using technology to make very, very small kind of, I would say, sachet kind of a product. So maybe a vector product, vector disease product, or maybe just a, say, very workman compensation kind of a product for a domestic worker. I think things like that can only come if we use technology and reach and give the right information, education to the ultimate customers. It's a financial product, so mostly it will be the responsibility of the financial sector to take it to the mass who can only increase the penetration. So a third point would be, while we do this, while we commit, I think it is the bigger responsibility of the industry would be to address on 2 points. One would be the capacity. Like, we have to mutually create capacity. It can be like for weather or climate, we are talking about a larger capacity by pool. Similarly, for most of the things, we have to build a capacity. And second, we would have to use the experience and data or the good practices of each other. Then only it can prosper. So if one X company is doing a right product for a right segment on maybe a indemnity health, or maybe on a liability product which can address the MSME needs, then it needs to be spread across. And for that, we need capacity and adopt the mutual best practices. And I think the new fintech companies, the distribution freeing up, which is happening and which is the target, can only take us to the expected level of penetration. Thank you, sir.
Thank you. With that, let me conclude this seminar and thank all the participants and hand it over to Dr. Charan Singh.
I must thank each one of, sir, I must thank you for sparing time and chairing this session and the series of sessions for 2047. but the quality of discussion that we have had today on insurance sector is very high. And therefore, I want to thank each one of the panelists today for accepting our invite at a short notice and providing us the richness of your experience and the vision as you see insurance in the next 25 years. Many suggestions have come. We have Madam with us, and she's, of course, I'm sure going to carry it to the authorities. But many suggestions have come, and for scholars and academic workers and policymakers, I think it's a great input that we have collected today. I must mention that today's presentation discussion will be available tomorrow, the recording, and I'll send it across to all of you. You can use it the way you want, but of course I'm going to use it in a policy sense and send it across. Next Friday, we have a similar discussion on non-banking finance companies and what is their future in the next 25 years. In America, they're generally called as shadow banks, and their share is almost as large as a proper commercial bank, except that of course the deposits are not insured, just with that difference, but their volumes are large and their contribution to the economy is very large, and they do the last mile even there in America. So what is the role of NBFCs in our country and how do we visualize it in the next 25 years will be discussed on the next Friday. I would invite all of you to kindly come and participate and spend time with us. Once again, thanks to each one of you. Thank you.
Thank you.
Thank you.